Welcome back, everybody. So today we are going to be discussing some major notable public figures, past and present, that have utilized this timeless product of whole life insurance, more so as a tool to fund their projects, businesses, future ventures, just build wealth in general. Whatever it may be, we want to show you that this time-tested product has been around and been utilized for 2+ centuries now. So let's go ahead and get into some of the public figures, the more notable faces that have used this type of product over the years. Number one, we got the man, the myth, the legend himself, Mr. Walt Disney. Now, when Walt Disney was looking to open up Disneyland, first of all, people were like, essentially, you draw these little characters. We got a mouse. We got this dog thing. You call it Goofy. I don't know if we can get behind this. So traditional lenders were a bit hesitant to back Disneyland because the idea of an amusement park tied to movies was pretty risky. Walt Disney turned to the cash value in his participating whole life insurance policy when other options were essentially unavailable to him. He didn't need to withdraw the funds because of the type of policy he had. He used the policy's cash value as collateral for the loan, maintaining the growth of his policy while gaining access to liquid capital. This allowed him to really avoid giving up equity in his vision to outside investors, really allowing him to retain full control of Disneyland and the future trajectory that it went on. So the funding allowed Disney to really break ground on Disneyland in 1954, turning his dream into a reality when traditional funding sources, like I mentioned, doubted that this would ever really work. It seems to be going all right. I don't know. I've been there a few times. Disney's approach highlights how participating whole life insurance can really serve as a financial safety net and a tool for entrepreneurs to seize opportunities when they present themselves. When nobody else believes in you, you know who will? You. And your insurance policy will be there to back you. Historian number two is Mr. J.C. Penney, James Cash Penney. Cool middle name, Cash. So a lot of people don't know this, but in the early 1930s, the Great Depression was, in full force. It caused severe financial strain on JCPenney's retail business. Sales plummeted, and banks were really unwilling to extend loans due to economic uncertainty. Now, Penny turned to the cash value in his policy, his whole life insurance policy at that time, borrowing against it to access the funds that he desperately needed to keep his business running and keep his employees paid. This was a real stand-up guy, and I know doing something like that, I'm sure brought a lot of belief to his employees and make sure that they felt that they knew that he valued them. By utilizing his whole life insurance policy, Penny avoided taking on additional risky loans from traditional lenders with harsh terms. We always know those terms to be harsh, preserving the long-term health of his business. Thanks to this strategic move, JCPenney's business survived the Great Depression and later on thrived, becoming one of the largest, most successful retail chains in America. Penny's story demonstrates the importance of having a financial safety net like participating whole life. It not only saved his business, but it also preserved his ability to rebuild and grow when the economy improved. We love liquidity. We love flexibility. We love not having to ask questions to get access to money. Number 3, this could be a good one, could be a bad one, but either way, he is a business mogul, and that is Ray Kroc. So in the 1950s, Ray Kroc faced significant financial hurdles while trying to expand, wait for it, McDonald's. Traditional financing options were pretty limited, and he needed additional funds to support the franchise's growth. Kroc tapped into the cash value in his life insurance policy. What a surprise. I mean, it seems very common, borrowing against it to secure the necessary capital. This move provided the liquidity he needed without giving up any equity in his business. The borrowed funds helped Kroc cover operational costs, invest in new locations, which now seem to be literally all around the world, and refine the franchise model, laying the foundation for McDonald's massive success. By using his life insurance policy, Kroc avoided bringing on outside investors. That seems like a really common theme. Outside investors are constantly wanting to get in, get their piece of the pie, make sure that they get some ownership. So they're going to have income coming in for life. But when you have the control, when you have access to the money, when you make the rules, you say, you know what? No, don't worry about this. I got this. Because those investors might have diluted his vision for McDonald's or limited his decision-making power. So we have no idea how that could have turned out. This strategic use of his policy allowed Kroc to overcome early financial challenges and grow McDonald's into the world's largest fast food franchise. Obviously, we all know that, but this revolutionized the restaurant industry as a whole. He wouldn't have been able to do that, or it would not look like it did today, if he didn't have access to a whole life insurance policy. Kroc's story highlights the flexibility and the opportunity provided by participating whole life insurance policies, showcasing how entrepreneurs can use them to fund business growth and achieve long-term success. Number 4, we're going to throw a lady in here for all the ladies out there, not just any lady, but a real boss. Doris Christopher, in 1980, had a vision to create a direct sales kitchenware company, but faced financial constraints typical for any new entrepreneur. I don't know, unless you're like Donald Trump or you come from money, most people get into the entrepreneurial space without a ton of funding on the back end from, family money or whatnot. So that was Doris Christopher's example. She was able to leverage cash value from her whole life insurance policy, borrowing against it to fund the early stages of Pampered Chef. This gave her access to the money that she needed to launch her business without taking on any traditional high-interest loans. Again, I think another common theme is I don't want to take on all of these expensive high-interest loans, these things that are going to end up costing me a ton of money and really put me or keep me in the red, while I could be in the black if I had prepared otherwise. So using her policy meant she could retain full ownership. The funds allowed Doris to purchase initial inventory, develop her direct sales model, and hold her first cooking demonstrations, which became the cornerstone of Pampered Chef's success. My mom was a huge Pampered Chef fan. Well, actually, Thanksgiving is like right here, basically, or I don't know when you're watching this, it might have just passed, but we're using Pampered Chef stuff right now to bake some of these pies and do some of this other stuff. So Doris made an impact. Using her policy meant she could retain full ownership and control over her business, always a common theme, ensuring her vision for Pampered Chef remained intact. I think that's such a huge note to kind of focus in on is control. Control. At the end of the day, the more we kick out to third parties, whether that be investors, lenders, whatever, we're losing control of our vision, of our potential business, of the direction that we may want things to go in. When you warehouse your money and you have access to it and you're able to, keep it liquid and move it and use it when you need it, more of the control stays within house. And I think at the end of the day, that's extremely valuable for a whole lot of people, especially business owners. So Pampered Chef quickly became a household name, and by 2002, the company's success attracted the attention of Warren Buffett from Berkshire Hathaway, which acquired it for a significant sum. We're talking about over $1 billion. So I don't know, but that whole life policy and those decisions that she made earlier on and keeping the people out, the outside investors and those people that wanted to take large chunks of it or hit her with these high interest rate loans or whatever, it seemed to work out pretty well for her, just like it did for the others. And last but not least is our current, former, recent, whatever you want to call it, president, Mr. Joe Biden. Before becoming vice president and later president, Joe Biden reportedly used the cash value of his whole life insurance policies to help fund his son's education and family expenses during challenging financial times, demonstrating how such policies can provide a financial safety net. Now, I know some things came out about Biden's son. I'm not going to talk on those, but again, flexibility, access to money, liquidity, even in tight times, you know that you don't have to go and jump through a bunch of different hoops and do a bunch of paperwork, meet certain requirements, do all of these things just to get access to this money that you need to follow your dreams or to put your kids through college or to, keep a business alive, whatever it may be. These are just 5 of many countless examples of how properly structured participating whole life insurance, specifically used for infinite banking, can completely change the game. Now, again, there's other products out there that you can do similar things with. You can do infinite banking, the concept of infinite banking, with a lot of different products. But we know, bar none, facts on facts on facts, that whole life insurance, a properly structured participating whole life insurance policy from a mutual company, is the best product to practice the concept of infinite banking. And if you would like to learn more, if you would like to potentially at some point in time get your name on this list of people that have utilized these policies to build, grow, maintain their wealth, their legacies, then by all means, reach out, drop a comment below, hit us up, head over to the website, legacylifeandretirement.com. Book yourself a free cash consultation. Let's get you educated. Check out the full overview. If this is like the first thing that you're coming across about infinite banking and whole life insurance, that's kind of crazy, but we got a full overview that you could check out. I'll go ahead and pin that at the end of this or down in the notes section below. But get educated. Let's get you the information that you need. Let's get you all the proper tools that you need so that you can make a decision if this is the best vehicle for you. Because if it works for them, if it works for the wealthy, I think it'll work for you. Warren Buffett, we talked about him a second ago. Warren Buffett, I'll end it with this right here. Warren Buffett has a great quote. If poor people just did what rich people do, they wouldn't be poor anymore. I don't know where you're at financially, but what I do know is you're not Warren Buffett. You're not Doris Christopher. You're not a lot of these people who have created massive, massive, massive wealth. But if you want to have what they have, or at least a fraction of what they have, then let's start doing the things that they're doing. As always, the information is free, but the knowledge is priceless. Let's get you educated. We'll chat soon. Peace.